Hello, everyone, and welcome to our free June 2026 webinar, the 5 QBO cleanup questions every bookkeeper should answer before saying yes. And I'm so excited that you're here. And I know from the chat, some of you have said either you've taken on a cleanup before and sorry you'd never do it again, and maybe now wondering, am I doing it right? Someone saying, I love cleanups and I'm here to learn more, and that's fantastic. So I'd love to hear from you in the chat. What is your experience with cleanups? That would be awesome. And why are you here? What are you hoping to learn about cleanups? And I hope that I will give you lots of good information on cleanups. So, in case you don't know who I am, my name is Veronica Wasek. I am the Unstoppable Introvert. I founded 5MB Academy to help bookkeepers gain confidence, find better clients, and also develop more profitable services. And I'm now doing that around diagnostics and cleanup. I've decided that is going to be my focus going forward. Um, Cleanups is one of those things that it's like I didn't want to do it. I didn't want to teach cleanups, but I just kept getting pulled back into it. And honestly, I do enjoy cleanups. I like the challenges, the ability to solve those puzzles. And I'll tell you more about my cleanup journey. I started and ran my own bookkeeping firm, Mavency, for 15 years. I sold it in December of 2024 to my key employees. And as I said, now I'm a solopreneur focused on education and mentoring of bookkeepers. And I'm also a farm owner. So I get to go for 3 days a week with my husband to our beautiful farm that is about 90 miles west of Houston. I live in the Houston area in Texas. So we get to get away and be at our farm, which right now is quite rainy. So a lot of quiet time just watching it rain sometimes. So we're talking about cleanups and the 5 questions that every bookkeeper should answer. So I have been there, and I like this slide. I use it a lot in my presentations. I have been there. I have been there. I have made all the mistakes. I have spent a lot of money, lost a lot of money developing systems, taking on the wrong clients. And when it comes to cleanups, I think it always goes back for me that I didn't ask the right questions when I was first considering taking on that cleanup client. And so today I'm going to cover the 5 questions. The first one, do I understand the client? Number 2, do I understand why they need a cleanup? Number 3, do I understand their tax situation? Number 4, what are the books telling me? And number 5, what is the scope, complexity, and pricing of the cleanup? And give me 1 second to get things in front of me. Okay, so the first question is, do I understand the client? So we need to understand the client's business and how transactions flow through the books. And many times, we when especially when we're starting out and a potential client comes to us, we don't really want to know a whole lot about them because we just want the client. We need the money, we need the experience, we're excited to get working with the client, but many times we don't understand their business. And I would say even sometimes we get scared that we don't understand the client's business and then decide we're not going to take on the client. So for example, one of my first clients was a veterinarian, and he asked me like, what is your experience with veterinarians? And I said, well, honestly, I don't have that experience, but I have this other kind of experience that I think translates very well into veterinary services because you're using a point of sale system. And I explained why I thought that I could do a good job, even though I didn't have that specific experience. So when we're looking at in answering the question of what do I know about their business. I think the number one question when you're talking to that prospective client is really who am I talking to? Am I talking to the owner of the business? Am I who would be the decision maker? So am I talking to a decision maker? Am I talking perhaps to their spouse? Sometimes I've talked to their parents. Okay, the parent is very worried about their child, adult child who maybe started an e-commerce business and now they don't know what they're doing. Am I talking to an employee? Sometimes I'm talking to 5 employees all sitting in a room together. But the most important thing here is to talk to the decision maker because we can talk to an employee, we can talk to somebody else, and they're not the ultimate decision maker. So it's always good to at least who are you? What is your role in the company, and who will be making the decision? Next question is what does the business do? Sometimes we don't have a good understanding of what they do. And so that is one of the first questions that I'm asking when I'm considering a prospective client. What is it that they do? Also, how does the company make money? So, what are their sources of revenue? Perhaps if they're an e commerce business, maybe they sell on Shopify or Amazon. Maybe it's a hair salon. Okay, do they do just hair? Are there nails or massages or whatever? It's good to understand how they make money. So what and so the way I would ask the client is what are your sources of revenue? The fourth question, how do customers pay? So are is the company invoicing customers? Are the customers paying through maybe Stripe or QuickBooks payments or a merchant service? Maybe they're writing checks. Maybe the client is taking cash. Maybe they say, oh, any way they want to pay me, PayPal, um, Venmo, Zelle. You need to know, and especially for a cleanup, that if the client is taking a lot of different kinds of payments, that's really going to increase the complexity of the cleanup. Next, I want to know, do they have employees or contractors? And if so, how many employees do you have? How many contractors do you have? And now the question that we all need to be asking is, are they using AI in their business for the financial side of their business? Because you have a lot of these early adopters who now think that, hey, I can just connect my QuickBooks to Claude and it's going to do all my bookkeeping for me. And I guarantee you that you're going to have a lot of cleanups from people who attempted to do that and then didn't know what they were getting into. Or even now that you have these AI bank feeds, especially in QuickBooks, that the AI is just sort of categorizing things. It sometimes doesn't make any sense for how it's doing it, and so it's good to understand how much are they using AI just to get a sense of again, am I walking into a mess? Is this going to be really complex? As you know, I like to share systems because I'm a systems person and have developed a lot of systems when I had my bookkeeping firm. So the system that works here is that a prospect is going to book a discovery call with you. Okay. The prospect is going to fill out an intake form because, as you saw, we have quite a few questions here. And there's even more. I want to know even what are the revenues? I want to know other things. And so rather than asking that prospective client during a discovery call or a free consultation, I would rather use an intake form to have them fill that out. And then I can have that ahead of time, be able to review it, and then not take so much time in the discovery call. So the third step is to review the intake form for the answers that they have provided. Question number two, do I understand why they need a cleanup? So, why do we want to know that? Well, we need to understand the value of the cleanup. and whether the client's expectations align with reality. So, do they need a tax return? Do they need to provide financials to an investor, to a lender? Um, During the COVID era, a lot of clients came to us because they needed to get SBA loans. Actually, all the other loans that were being given, some of them by the SBA during the pandemic, and they needed financial statements and they didn't have them. And so you need to understand why. Why do you need a cleanup? What is causing you to need this cleanup now? And that will also help from the standpoint of, if a client doesn't see the importance of having clean financials, they're not going to see the value in that cleanup, as opposed to the client that says, okay, I need to get my tax return done, or I need to provide financials to one of my investors, or I need to provide them to the government for my SBA loan. There's different reasons for cleanups, and then different levels of value that your prospective client assigns to that cleanup. So I want to know, why do they want the cleanup? What do they think is wrong? Many times clients who realize that they need a cleanup, they can see certain things that are wrong, and they will tell you. And many times I will ask, why did you reach out to me today? Um, what outcome are they hoping for? So, because sometimes they'll say, well, I need you to get me as many tax deductions as possible, and I need you to be aggressive. Okay, maybe that's a red flag. Okay. And actually, tax deductions is up to their tax preparer, it's not up to the bookkeeper. But you need to know, what is the outcome that they're hoping for? Are there any deadlines, as I mentioned before? Are they reporting to third parties? Maybe they want to sell their company and they need the financials, and they need to make the company look as good as possible. Again, we're not magicians, but we need to know why. Why now? What is the purpose? The system that works here is, during a discovery call, when you're talking to that prospective client, is to ask them, why did you reach out to me today? So typically, when I would do my sales calls with prospective clients, I would, first of all, understand what is their name. If I didn't know already, what is their role in the company? And then I would tell them that the purpose of today's call is to see if we would be a good fit for working together, so that they can learn about me and my company. I can learn about them. And then I will just start the conversation with, why did you reach out to me today? And then let them sort of, they start telling you. Okay. So it's not that hard to do that. Just start it out with that question. What I would normally do then is, I would ask the question, take lots of notes, and actually I would type my notes, take notes. You might use a note taker now if you're more fancy than I am. I tend to think with my fingers, and so I like to just do analog notes, um, and then show that you're listening. And and the reason I say that is because once you do enough cleanups, you will likely hear the same kind of problems. And I got to a point in the beginning of, I think I've heard this for the 50th time. Okay, the undeposited funds are messed up, or this is wrong, or that's wrong. And I would tune them out, because I thought, I've heard it all before. And then realized that that was where the value was, in the pain. They were telling you all their pain points, and I needed to acknowledge them, and I needed to show that I was listening. And another way in which I showed I was listening would be, after they told me all, what they think is wrong with their books, I would go back through my notes and kind of repeat some of the things. Oh, so you mentioned that undeposited funds is a really big problem for you, and you have duplicated income. Yes, I have worked with a lot of clients who have that issue. Or yes, that is a well-known issue with QuickBooks, that untrained users don't, they don't quite know how to use QuickBooks, and then you have old undeposited funds and duplicated income. And so it's a good way, again, to show you're listening and to validate the client and the pain points that they're having. Question number 3, do I understand their tax situation? Now, I mentioned that we really, as bookkeepers, don't need to get so much into, taxes, but we need to understand some things about tax, especially how it affects our clients because of the level of complexity that taxes bring into the bookkeeping. So we need to understand how cleanup decisions may affect tax reporting and prior year balances. And that's one of the things that we get stuck with. Okay, this client came to us. They already had let's say, a 2025 tax return done, but they never reconciled their bank accounts. And now I'm trying to do 2026, but I have this adjustment. I don't know where to put it. It might affect the tax return. And in fact, you should know it may affect the tax return. You may not know that. And that's some of the things that we need to be aware of from a tax perspective. We typically don't want to change numbers in prior years if the tax return was already done. And so those are some of the things that we need to be aware of. So these are the things that I would always ask. How is the company set up for tax purposes? So the entity type, I probably wouldn't ask the client that, but how is your company set up for tax purposes? And a lot of times they'll say, I have an LLC. Okay. An LLC is not an entity for tax purposes. It's considered a disregarded entity. So that means that you have to ask them another question. Okay. So how is your company set up then for tax purposes? Is it an S corporation, a sole proprietorship? And sometimes they don't know, or sometimes you have to ask them, did you file a Schedule C or an 1120S? Or something else, and sometimes they have to look it up. And this is, by the way, for US purposes, the different forms that I'm quoting, but I'm sure that, if you're in another country, that you have tax regulations that you have to follow. So it's important to know them whether you're in the US or in another country. But for US purposes, I want to know what is the entity or the tax form under which they're filing. When was the last tax return filed? The reason I want to know that is because, okay, if they filed for 2025, then we are likely not going to need to go and try to clean up 2025. We'll start with 2026. But maybe if they didn't file since 2023, for example, now we might need to look at a cleanup for 2024 and 2025 and then 2026. So it's very important to know that because typically when they filed the tax return directly affects the periods that we will clean up or not clean up. So then that's okay. Are we talking about 1 year cleanup, 2 years? Um, it can definitely affect pricing and scope. The third question that I want to answer, and this is typically when I'm doing a diagnostic review and not necessarily when I'm talking to the client, is the reconciliation of the balance sheet in QuickBooks to the client's balance sheet on their tax return. We call that the Schedule L. So the Schedule L is the balance sheet that shows up on an 1120S, a 1065, and 1120. So 1120S is for an S corporation, 1065 for a partnership, and then 1120 is for a C corporation, and that's all in the US. And there has to be a reconciliation between the balance sheet in QuickBooks and the balance sheet on the Schedule L because of the correlation really between the bookkeeping and the tax return. A fourth item that I want to know about is how does the owner compensate themselves? How do they okay, so are they a sole proprietor? Do they take distributions, which is what they should? For an S corporation, are they taking a salary and distributions? And so it depends on the type of entity that they have and how they're paying themselves. And again, this affects the bookkeeping. I need to know, okay, what part of what you're paying yourself is payroll versus distributions versus something else. And then also payroll considerations. Are they paying employees? What payroll service are they using? Um, Typically, those I have ADP, I have Gusto, or I use QuickBooks payroll. I want to know about that just because of, sometimes they'll say, oh, I'm just sending money to my employees via Zelle. Okay, are you withholding taxes? Like, you might have a lot of challenges. And so this is the way to initially scope out the extent of the cleanup, the complexity of the cleanup. So the system that works here is the discovery call. So the discovery call is what I call the call that you have with your prospective client for the first time. Some of you call it a consultation or a free consultation. I prefer to call it discovery call. And we're going to ask these questions. We're going to ask them basically most of the questions here. The schedule L, as I said, wait until you do a diagnostic, but everything else, I want to know those things because it really informs the rest of how you would approach the cleanup, and especially again for scope and for complexity. So I'm going to ask those questions, and again, I'm going to take those notes. Question number 4. What are the books telling me? And there's a couple of ways in which books, the books, I have my magic ball there, but we have to identify hidden issues, clean up complexity, and areas that require further investigation. And some of this can happen when you're first looking at the books. I call it a smart review. It's just 15 minutes, okay, of just looking really quick. And other things, most definitely you would identify when you're doing a paid diagnostic review, but you have to look at their books. And really, when you're doing that smart review, that 15-minute review, we're looking at the tip of the iceberg, because if we find things at the tip of the iceberg, we know that there's a whole lot more stuff underneath. For example, have the bank accounts been reconciled? So there's a big difference between a client who comes to you and they have their bank accounts reconciled, and a client who hasn't ever reconciled, because then we'd run into issues of, okay, which periods are we reconciling? In which periods are we adjusting? There's a lot more complexity and questions that we have to answer before we take on the cleanup. Are there old uncleared transactions in the bank reconciliations? Sometimes the accounts are reconciled, but then there's like 100 unreconciled transactions. So technically, the accounts are not reconciled because you have these old uncleared items in the bank reconciliations. Those have to be addressed. Are there old uncleared undeposited funds, which I guarantee you, most like 90% of the time there will be. And again, tip of the iceberg. If I have old uncleared transactions and undeposited funds on an accrual basis, I have duplicated income. That's how QuickBooks works. And so, most definitely, the client would want to get that fixed, obviously, because if they're looking at their books, they're not even accurate. Their revenue is overstated. I'm also looking for whether there are items in opening balance equity in QuickBooks. QuickBooks has this quirky way of putting opening balances in this opening balance equity account. Sometimes you can delete an account on the balance sheet that has a balance, and it throws things into opening balance equity. And so this is one of those accounts that you really want to look at closely to see, okay, what is in here and is there cleanup that needs to be done? How many of you have come across the unapplied cash payment income and unapplied cash bill payment expense? I think I have all the words in the profit and loss on a cash basis and wonder what the heck is that? Okay, that's another one of those weird QuickBooks things that QuickBooks likes to has to balance itself on a cash basis. So then it throws things into this unapplied cash payment income account. So, for example, if you have a credit on an accounts receivable customer balance on a cash basis, QuickBooks has to zero out accounts receivable and then puts that amount into unapplied cash payment income. And some of those things, actually, I was talking to one of my students in my Facebook group, and I think she said there was stuff sitting there from 2014, I think, I mean, for many years prior, and then trying to figure out what do you do with that? And another tip of the iceberg, miscategorized transactions. So you have untrained users, you know, your clients trying to categorize transactions, they don't know what to do. Now add in the AI bank feed that's taking its best guess and not doing a very good job. And now we have even more uncategorized or miscategorized transactions. In the past, actually, QuickBooks would put things to uncategorized and to at least you knew where to look. Now they're just the AI bank feeds are using the weirdest accounts. They're using the services account, they're using the purchases account, um, and they're not using uncategorized anymore, at least as of a month ago when I looked at it. But transactions are getting miscategorized. So then add in somebody connecting their QuickBooks to Claude to some AI, and the AI categorizing a year's worth of statements into QuickBooks. Good luck. Okay. I mean, I think there's going to be a lot more cleanups coming our way because of clients trying to use AI. And then once we really look at the tip of the iceberg and talk to our clients and offer them a paid diagnostic review because we need to go deeper to diagnose what's wrong, then you get into deeper issues. Commingling. I mean, don't even, I mean, you can tell me in the chat, but I'm sure you've all come across commingling. Balance sheet opening balances. Are those balances correct? What is in the balance sheet? The balance sheet carries balances from inception. So it's not like the profit and loss that you start over every year. The balance sheet has everything from the beginning of time. If that balance sheet is not clean, the books are not clean. I talked about the Schedule L reconciliation earlier, that's really important to then have a correlation between the balance sheet on QuickBooks versus the balance sheet on the tax return. As I mentioned, old balances in the balance sheet, just sitting there for years and years because it's not getting cleaned up. When the client is using PayPal, Stripe, Square, all these things, Zelle, um, Venmo, and they just think like, "Oh, I'm just gonna take any kind of payment." That's a lot of work, especially PayPal. I mean, PayPal just you can pull your hair out just trying to figure out PayPal because PayPal takes money from wherever. And then add in a PayPal debit card, PayPal credit card. You can connect your personal account, your business account. I mean, it's very complex. Miscategorized loan transactions. Sometimes you have clients recording loan proceeds as income, or they're posting the full loan payment against a note payable, but not recording interest expense. Miscategorized sales taxes, payroll taxes, payroll. So there's a lot that we don't even see when we're first looking at the client's books. And as I said, really a paid diagnostic review is the best way to then assess and go deeper into these issues. So the system that works here when you're talking to that prospective client, and you can tell just from what they're telling you, or even just looking at their books for 15 minutes. So first of all, is that discovery call. So from the discovery call, we're going to learn, why they reached out, what they think is wrong, some of their issues that they're having. And you can go in two directions. One is to offer a 15-minute smart review, which I consider optional. So it's just like you're just going to look at their books literally 15 minutes um, to see what's wrong. And again, that's just tip of the iceberg. What I started doing that just to kind of get my confidence level up, but then I just jumped right into offering a paid diagnostic review because that way, I can just immediately go in and figure out what's wrong with the client's books. And notice that I don't offer the cleanup right away. I offer first the paid diagnostic review because really that's the only way that I can get a full scope of work before going into the cleanup. So that addresses a lot of the issues with scope, with pricing, with even the complexity of a or complexity of a cleanup. Um, there were a couple of times when I worked with clients that I thought, you know what, I don't think I'm the best person to help them with this issue, but I could only scope out that work if I did the paid diagnostic review. And question number 5, what is the scope, complexity, and pricing, which I started to talk about already. So when thinking about taking on a cleanup, I mean, this is, I think we all need to answer because I know many of you told me on Facebook that you have trouble scoping out the work that you need to do. You're not sure if you really found everything that was wrong with your client's books. How complex is it? Knowing even what areas add more complexity to a cleanup than other areas, and then just how to price it. So we need to determine whether to take the project, how to approach it, and how to price it appropriately. And here's where we need to know, okay, how many years am I cleaning up? Okay, so how many is it, like I said, did they just do a tax return, or maybe they haven't done a tax return in a few years? And based on the years for which they have not filed a tax return, usually those are the years that I would look at cleaning up so that then they can do their tax returns. So, number of years involved in the cleanup. Which periods can be adjusted is a big question to answer when looking at a prospective client, because again, if a tax return was filed, I likely cannot go back and adjust prior years. Um, Maybe the tax preparer wants to amend tax returns, but that's not my decision as the bookkeeper. And then what areas need to be cleaned up? And really, once you've done that diagnostic review, then you know what areas you need to clean up. To assess complexity, really, am I cleaning it up or is it so bad I need to start over? When I worked with e-commerce clients, many of them would just be brand new e-commerce sellers and they would connect their Shopify e-commerce platform to QuickBooks with some random app, um, and then the app would just throw like 3,000 transactions into their QuickBooks, and we have no idea how to make sense of any of that. In those cases, we actually started them over just because, okay, they haven't had their books for more than 6 months. They really haven't even attempted to do very much. We're setting those books aside. We're starting over doing it correctly. Sometimes you have clients that they have been using their books for quite some time. They want that historical information. They are invoicing customers through QuickBooks, maybe managing bills through QuickBooks, doing other things, maybe payroll in QuickBooks. And so it's not that easy to just say we're going to start them over. In that case, a lot of times we have to clean them up. We need to know, do we have complex transactions? Like, are they using PayPal or Stripe? That adds complexity. Do we have an industry specific cleanup? Like, remember, I talked about the veterinarian or hair salon or e commerce or nonprofit. There are going to be other considerations I have to bring to the table because now I have things that are industry specific to that client. Am I dealing with a massive commingling situation? And I've come across those. And even I got to the point with commingling that I did not take commingling clients. After a while, I just thought that enough is enough. I may take you on, but you need to, like, if I take you on, you will have already uncommingled yourself in order for me to take you on. I'm not um, waiting for you to decide you're going to comply with how I do business. You either stop and let me fix things, or we just don't work together. And a lot of times they weren't willing to clean things up. And so we didn't work together. Another question to ask: will this client be responsive? So, a lot of times we get these prospective clients who come to us and they'll say, I haven't filed my taxes for 5 years and I need someone to help me get my bookkeeping done so I can file my taxes. And we're just like, oh my gosh, I'm here to help you. And really, you're just trying to rescue them, okay, from a situation that they got themselves in. And now they're pulling you into their situation and they're going to be unresponsive. And the reason that I know they're going to be unresponsive is because they are procrastinators. They haven't filed their taxes in 5 years. And said, oh, what makes you think that now they're all of a sudden going to change and be responsive to you? Okay, so these are clients that I definitely stopped taking after I got burned a few times because you cannot rescue them. Like you cannot put yourself in that kind of a mindset that you're going to rescue them or that they need you, because if they're not willing to cooperate with the process, you won't be able to rescue them. And so you really have to think about, will they be responsive? Because as you all know, that clients are already somewhat unresponsive. They're very busy. And so now if we get an ultimate procrastinator as our client, it's going to take a long time. I mean, I had a cleanup, I think that went for 2 years just because of the client was so unresponsive. And finally, we were able to finish them. And then they wanted us to clean up the next year. And I said, no. And even their CPA was begging me to, like, please, like, you have to do their cleanup. I said, no, I'm sorry. I'm not doing 2 more years with this person. And let's see, and other things, other types of complexity that may be involved. We have to think about that. And then pricing. Really, how much should we charge for the cleanup? Are there other factors that I should consider? Some of you I know want to kind of invoice by the hour. I'm not a big fan of that. We'll probably have another webinar just to talk about specifically about pricing, but how long might it take? Complexity, how quickly do they need their financials? A lot of those things need to be factored in their pricing, or even how should you get paid? And also for other factors, consider the client's responsiveness. Are they going to be responsive? If they need their financials in 3 weeks because they have to file a tax return, okay, I can get your cleanup done, but you're going to have to answer me as soon as you get a question from me. I need an answer from you. Administrative time is another thing that initially I didn't even consider. Like I just said, well, it just took me 8 hours to do the cleanup. But then when I hired employees, now I have employees onboarding. I have I'm working with additional employees. There's more administrative time that I needed to consider that as a factor for my pricing, and onboarding as well, getting everything to the client, the back and forth, sometimes just the back and forth. I consider that administrative time that we need to consider as part of our pricing. So the system that works, that this is what I evolved into after making all the mistakes. For pricing to really give yourself wiggle room with your pricing, give the client a price range for the cleanup. And the way that I would normally price a cleanup is because I there's a whole other backstory to my journey with pricing, but I learned to simplify pricing. And so for a cleanup, I would just figure out what I would charge the client on a monthly basis and multiply it by the number of months that I was cleaning up. And that was the initial pricing that I came up with, and then I would bump it up, depending on, let's say if I thought it was going to be $6,000, I might tell them the pricing for the cleanup will be six to $8,000. And then I would put the client on an auto payment on a weekly basis. I found out that clients really liked paying weekly. I don't know if it's just that it's a smaller number, but they would pay weekly over 6 weeks. That's typically the time that it took my team and I to complete a cleanup. So if it's gonna take you 3 weeks, then get paid over 3 weeks or 4 weeks, etc. And we used Anchor to the app called Anchor to do that, to put the client in auto payment. So we're not invoicing and waiting to get paid. This was all auto payment. Now, for those clients that you're going to need to say no to, and really, I'm going to actually give you a little tip here. I used to have a very hard time saying no to clients because I felt like I needed to rescue them, because I liked the challenge of the work that was coming my way. Excuse me. Just because I was too scared to say no. Okay. But when I learned to say no to the wrong clients is when my revenues and my profit increased. I don't know what it is. I guess it's just that you are making room for the right clients. And so learning to say no, it's a very valuable skill set. Now, if you're brand new and you need the clients, you need the money, and you need the experience, perhaps you're not going to say no to everything, and I think it's okay. I have been there. I needed the money, I needed the clients, I needed the experience. But at some point, when that is not so much of a concern, you need to know how to say no to the wrong clients. So, how do we say no politely? First of all, you do not owe the prospective client an explanation or a justification for your decision. You're just one business owner telling the other business owner, we are not going to be a good fit for working together. So here's what we say: thank you for considering me for your cleanup project. Or thank you for considering me for, whatever it is, okay, for your cleanup project. Based on my assessment, I don't believe I'm the best fit for your needs, so I won't be moving forward with your engagement. I wish you the very best. So again, I don't need to tell them that I don't like you, or that you're a procrastinator, or that, you're commingled to the nth degree, and I don't want to work with you. It's just, I don't think you're the best fit or I don't think I'm the best fit for your needs. That's it. And remember that no is a complete business decision that you don't need to defend. I don't have to defend telling a prospective client no. And really, most of them don't. By the time you say no, they're like, okay, want to get off the call. And some of you are saying, Melissa says, "Yeah, I don't like you," but sometimes you don't like them. And really, after you have worked with hundreds of clients, you start to read the client personality, and like sometimes like we are not going to work well together because I can already tell that you fit in this type of, like, you're a dreamer, you're too bossy, whatever. You can start reading their personalities. And Kathy's asking about auto payment, so you can use oh my gosh, my brain just went blank. Anchor. Say Anchor. Calm. All right. So learn how to say no, practice it. Practice makes perfect. Just practice it and or have a sticky on your computer that you can just say no. And really, honestly, when I said no is when everything changed in my business. So, to review, the 5 questions that every bookkeeper needs to answer before taking on cleanup clients is number one, do I understand the client? Number two, do I understand why they need a cleanup? Number three, do I understand their tax situation? Number four, what are the books telling me? And number five, what is the scope, complexity, and pricing? For more resources, you can go to my website, which will take you through it and have the links to my YouTube channel, my academy, my Facebook group, other resources. Thank you so much for joining me today. I really appreciate you showing so much interest in cleanups. There will be a lot more content from me on cleanups and diagnostic reviews and building confidence and pricing and all the things because I'm just so passionate about this, and I know that you have a lot of questions. So we will see you next time. And again, thanks for joining me.